back on screen. Yes, thank you.
We're live actually.
You're live? All right. So
Yes.
then let's start. Okay. So good evening and a very warm welcome to all of you to the second session on financial planning and literacy skills. Before we start, can any of you tell me, we are in the month of July and what is special about this month? You can just type your responses in the chat. What is special about this month of July? Any guesses? Yes, bingo. All of you seem to be getting it right. Yes, it's the season of taxes. And as everyone is busy with tax filing, comes the realization that, all this planning of finances, setting of financial goals and tax savings should have all started at the beginning of the year. But then comes the question, how do you start? Where do you, how do you go about things? Where is the beginning of it all? And to answer these questions and to guide us on our financial journey, we have with us today a champion of personal finances, our speaker for the evening, CA Manju George. Mrs. Manju George is a fellow of the Institute of Chartered Accountants of India and a qualified Information Systems Auditor, a partner in charge of the Bangalore branch of a national level firm of chartered accountants. As a chartered accountant in practice, her expertise lies in the areas of business structuring, systems controls, tax planning, compliance, various assurance services, and NGO management. In addition, she provides counseling on personal finance and debt management. Mrs. Manju also serves on various national and international boards, and she is a wife who supports her husband in the development activities among the underprivileged communities in India, and a mom to 2 young adults. She's also a speaker in various conferences, seminars, and workshops on topics of professional interest, including personal finance. And training on personal finance is her way of giving back to society, wanting to see people having freedom from the grip of money. So I think we have the right champion in this season with us. And without further delay, I'm going to hand over the session to Mrs. Manju. But just before I give it over, I would like to remind you that there will be a question and answer session at the end of her presentation where she will be taking questions. So kindly type in your questions in the chat. So over to you, Manju. And we look forward to your valuable insights.
Oh, wow. Thank you, Kelita. I hope I will do justice in this short time that we have. I know you had a great session. The last time you heard so much about investment. But in this session, we're just kind of going back to the basics and seeing, how do I really manage my money like Kelita put it. Now, I'm sure we have a wide range of people with probably income from maybe 20,000-30,000 rupees a month to probably a few lakhs a month. But believe me, the principles all remain the same, as you will see, as we go on. I'm going to actually start with to just get it practical and not so boring. I've got a kind of a case study of a person who earns an income of 30,000. Of course, the reason I'm doing this is to just kind of encourage you all to see how you fit in as you try and make for yourself what I call a cash flow statement or a net worth statement, which are like terminologies we like to run away from, but you'll see how simple and just common sense it is all about. Okay, so meet Anu, who's 26 years old, MCA. She's occupied in she's got an occupation employed in a leading software company in Bangalore. Has been working for 4 years. Her hobby, she loves gizmos, gadgets, and normally keeps up to date on all of these things. She earns a salary of 50,000 rupees on hand. Her parents are well settled, live in Hyderabad, and they take care of themselves. She's single, and she has plans to quit her job in 6 months and hopes to go for further studies and a cost of only 3 lakh rupees, obviously in India. And she knows she will not find any support from her family. Now, what we're going to do, all of you, I'm sure, have future plans. All of you have incomes at different levels, like I again said. However, what we're doing is we're going to look at, how the same person could deal with her money in 3 different scenarios. Okay, so let's look at scenario 1. Scenario 1, Anu, the same person, she says, my parents taught me to budget and keep an account of my pocket money, and I continued that even after I got a job. I believe in living decently, but being prepared for the future, right? Just like, again, I would encourage all of you to kind of think where you stand. Some of you are probably, already very well sorted out, like this girl in this scenario 1, you've already got all your finances sorted out and you know where everything's going. You've saved your money, you've invested, and you're pretty comfortable. Or you're probably in a position where, you're just kind of drifting, money's coming and you're just spending whatever there's a need, there is enough money to spend. You have no idea whether you're doing it well. You wonder if you're doing it well. And it's just, you're just living on. And probably there's another category of people who are absolutely in so much debt. And you find that, you're taking more debts to sort out your earlier debts. So these are the kind of 3 scenarios I've looked at. And you might be at whatever level of income, you could be in any one of these scenarios. Try and fit yourself where you would be and see where you'd like to go. That's what I like to encourage you to do. So scenario 2, we have Anu, who says, I believe I'm managing my money well. Unlike my friends, I always have extra money by the end of the month, and I'm living well, and I know I will be happy. Pretty optimistic over there. And then you have Anu in scenario 3. She believes she has a decent job. She loves to live in style, but she has no idea where her money goes, right? I heard this so often. I don't know where my money is going. But the 10th of every month, she's pretty bad. By 10th of every month, she says, I have no money left. And I have 5 credit cards that keeps her going, right? Now, let's look at how these people's finances actually look. Now, if you look at the first one, which is this, just trying to do this. Okay, so you have the first case where if you look at a statement, she's got 50,000 rupees, and that's come in. All of them have 50, scenario 1, 2, 3, and she's saved short-term, long-term. She has a car. All 3 of them have got a car, so she's paying up her EMI, and her 50,000 is broken up into rent, phone, transport, toiletries, other clothes, entertainment. Total of 49,500, and she has an excess of 500 rupees. Now, if you look at the same person, what does her income look like? What does her, what we would call a net flow look like? You see, she has car, she has savings for her studies already in place. You will remember that she needed 3 lakhs and she has that in place because she's been saving. She has a 50,000 long-term saving, she has provident fund, and she has just a car loan. And what is her net worth? That is what she owns minus what she owes somebody is her net worth, a positive net worth. You'll see just putting down your figures and basic common sense is what I would say. Okay. Now, if you go back to scenario 2, wait, I'm trying to move the screen up. All right. So if you take scenario 2, Anu, the person who kind of thought she was doing all right, she has a EMI, which she's paying off for her car, and she's pretty much not spending on anything. Of course, her provident fund is there, anything in terms of savings. And then she spends on herself, and then she kind of has 3,000 rupees excess every month, hasn't really saved, thinks she's doing all right. And if you look at her situation, she does have a car, she does have her home theater or music system, a PF balance, and a credit card loan, which she was paying up. You will see she was paying up an EMI on 1 credit card loan, right? And This is how she looked, situation number 2. Look at scenario number 3. You remember she was like very happy. She's got these 5 credit cards. She keeps rotating. She has no idea where her money is going. But you will notice that she's paying, in addition to her car, she has to pay 20,000 rupees a month out of the 50 that she gets on credit card loans. And she is on a minus, on a negative cash flow every month. Fortunately or unfortunately, we have credit cards that help us with our negative cash flow balance, which is a sad situation for young people, especially. So if you look at her situation, she does have a car, she does have a music system and a television in her house, a PF balance, but what she owes is a car loan, a credit card, a music system. The credit cards came because she bought a music system, a television. She went to Singapore on a holiday, and then on personal expenses, she spent 43,000 rupees, and she has a negative net worth. Now, remember, all of these people have the same amount of income, and it's just the way they have spent it. Again, I want to remind you, you could fit yourself. It could just be, a few few lakhs a month, or it could just be thousands a month, whatever. You could break up your own income and expenses in a manner that you are able to see where this is, where you stand. Now, I would call Anu number 1, the scenario 1, as someone who's smart, who's thought about her future, who has saved up and kept money safe. So that's Anu 1. The second one I would say is clueless. Now, the reason I'm saying clueless, if you look at what she owes and what she has with her in hand, let's say she has an emergency, and definitely in 6 months when she's going for a higher study, she does not have the money. She will have to take a loan. Whereas scenario 1, but Anu will not have to take a loan. So she's clueless. And here you have this person in scenario 3 who's in an absolute mess, because you're taking loans and loans after loans, and you are in a mess. Maybe you would say, hey, listen, I put in so much of effort, and I have studied and I've educated. I want to just spend on the things that I want to spend on. I don't want to be like this first person who's kind of saving up all the money. I want to spend, I want to go on a holiday. I want to do what I want to do. And I don't care where I am, because I'm going to make money. Believe me, this person who's on number 1, the smart person, is not going to lose out, because she has saved, and she will be in a position where she'll be able to do all these things. Remember, the person's the same. She does love traveling. She does, she loves to do, buy all these gadgets and all of that. She will be able to, but in a more planned manner. So you will be able to reach your goals in a more planned manner. But if you are in a mess, you are not going to be financially free, because as you will see soon, financial freedom, I believe, is not about more money. It's about being smart with the money that you have. So wherever you might fit in, maybe in a mess, maybe clueless, or you're already smart, let's see how I can remain and move on to being smart. Okay. So a few principles here: spend less than you earn, absolute common sense. Obviously I don't want to spend more than I earn, but the reason we do that most of the time is, I believe, we just look at why, and we see what we can do to get over it. The first thing to do, I would say, is get your attitude to money right. Maybe you've already just starting to make money. Maybe you've already making enough money. However, I would say check on what your attitude to money is. Neha at the last meeting talked about Monica Haran, and I was listening to her, and she does talk about the attitude to money, and you might want to check her out on YouTube. So what is your right attitude? Let me give an example. I had this, as part of our counseling, I happened to meet with one person who was very well placed in a software company, and he had, ESOPs in his company, of a company which was, very large, listed at the NASDAQ and all that. And he kept telling me, Manju, I'm really, really in a bad shape, and I have to talk to you. So, after some time I gave him, because he was a friend actually. So I said, okay, let's meet up. And he showed me, we went on Zoom, and we saw that he showed me his Excel spreadsheets. He had such extensive accounts of all what he had done. But his only problem was that it was actually a little post-COVID, and the stock prices had just dropped from where it was. So his net worth just dropped only because these prices on the stock exchange came down and he was having sleepless nights over it. What is your attitude to money? And I have this another person I met who says, I am all set for life. He's a young 30-year-old guy with a good job, but he believes that his solution to finances is to buy gold coins and just store it in his locker. And he's absolutely content believing that, he's all set for life because all his financial problems are going to be sorted with the gold coins that he has sitting in his locker. What is your attitude to money? Where would you like to see yourself is something that I would encourage you all to think about, because spending options are several. Impulsive buying, you have these 50% sale. Most often we miss the up to part of it in the 50%, and then we'll end up buying things just because they're on a sale. So be careful with that. And in this process of trying to spend less than you earn, remember, increasing your income is a great idea. And maximizing your return on income is a great idea. So please work, no matter, maybe you're a salaried employee, maybe you're working as you've got your own business going. Look at options of increasing your income. Find ways of second sources of income, of maximizing your return, so that as your income rises, you could also spend more. So look at that as an option and make money management a priority. So often people say, I don't like to keep track of finances, but at the same time, we do want to have more money. We do want to make more money. And if that's the case, make it a priority. Keep it at places where you can handle, but make it a priority. And as you manage your money, I would say manage it to meet your goals. And what are those goals? Don't let money decide. I have a definition for money. I believe money is a tool to fulfill your purposes in life. Now, what do I mean by purposes? What is that you exist for? What is the purpose and the reason of your existence? Even taking care of your family is a purpose in life. So, remember that money is just a tool to fulfill your purpose in life. Don't allow it to control you. Don't allow it to control you. Keep it in control. And to keep it in control, you need to be able to manage it to meet your goals. How would you keep it in control? You have to have a plan to be able to keep it in control. Money by itself is not evil. It's neither good nor evil. It's neutral, but it has an ability to just give you sleepless nights, right? Like the example we saw of this guy the prices of his stock was just dropping, and it just gave him sleepless nights. So don't allow it to control you is what I would say. And I believe if you reach a point where you don't let money control your mind, right? It's about the mind, what I'm talking about. You have financial freedom, because the solution does not come in having more money. In being able to manage what you have will give you freedom, because you are on top of it, right? And what does that mean? I call it managing your pie, learning to manage your pie. Irrespective of what your income levels are, if you consider the income that you have as a pie, and if you decide how much and how you want to break up your pie, I think you're in control. So let's look at all the things that you spend on, taxes, savings, all your living expenses. I put them together as expenses, charity, wherever, however you want to break up your income, the choice is yours. You might say I have a greater income. You might be earning 4 lakh rupees a week, a month, a year. Even then, the pie is your pie, and it would just remain this way. It would just remain this way. The choice is yours, how you want to break it. So make that choice. Keep your money in control, and you see you have the financial freedom. How do we do it? Yes, we will look at certain tips. I'll just give you certain tips within the time that's available, and then we'll see. I'll definitely take questions as well. Now, when I say manage, you would see in this particular pie, I've actually increased charity. When you've increased charity, obviously it has to go from another slice, right? So always remember, if you keep your slice in the right proportion as you want it to be, it's up to you. Exactly how you want it is up to you. But you must decide how you want it to be. Don't be clueless. Don't allow yourself to be in a mess where you have, where you've borrowed and you kind of have to put in, a big slice there for repayment of loans. But have a clear indication of where you would like to see this, your pie. So what happens if you, let's take taxes, for example. I do advocate that we all should pay our taxes. And I love the fact that Kelly just started saying it's time tax season. As people who are probably one of those really, a group of people here who've really had the opportunity of being educated and work in a country like ours with so much of diversity, I believe we ought to be good citizens and pay our taxes. However, we should not be paying a rupee more or a rupee less. Because the minute we pay a rupee more, we are eating into another part of the slice of, another slice, right? So just make sure you know where you're going. There's so much information out there. Spend a little time to decide where you want to be and how you want to spend. So coming to tax benefits, again, as part of managing your money, spend, you would make use of tax benefits to meet your goals alone. This is something that I like to say because I've seen people spend just so that they will get tax benefits, especially those who are in business. People tell you, no, you spend on this, that, and others, you just get a tax benefit. But believe me, it doesn't work like that, because if you're spending, let's say 100 rupees, you're spending 100 rupees on something where you really, if you have 100 rupees and you spend it on a tax expense, just because you're going to get a tax benefit, you will get 30 rupees a tax benefit and you have a cash outflow of 70 still. But let's say you did not even need this expenses. You're just spending it because you're going to get a tax benefit. I would say don't do it, because if you didn't spend it, you still you pay your 30 rupees in taxes, get to keep the 70 on hand, and there's no need for you to spend that money. I hope that's clear. So let's not spend just for the sake of spending and and getting a tax benefit. So that's one of the things I'd like to highlight here. I'm sorry, I'm just trying to erase this. It's not going off. Okay, sorry. Okay. So coming back to goals, when we talked about managing your money to meet your goals, I would say write down your goals so that you know when you get there. What do I mean by goals? Write goals of lifestyle, children, retirement, holiday, because these are things that kind of eat into your your entire pie, without realizing it. So what do I mean? Like, for example, I have a goal. As a family, we have a goal where we say that we will not change our car till we've used it for 6 years, or we've spent 1 lakh, we've run 1 lakh kilometers on our car. So once we've done that, we're not looking at every new car that comes into the market. We just clear that this is what we're going to do. So this will help you with managing your money if you would write down your goals for your, for all of these things, and work out a convenient plan.
Sorry for interrupting, ma'am. Can you share again?
Sure. Is there a problem?
Not exactly. I mean, someone have written in the whiteboard actually.
Saying they can't see?
It's still there actually. 100 minus 30 minus 70. Yeah.
I know I'm not able to erase it.
Okay.
You're only seeing that?
I'm seeing that on the slide actually.
Nothing else?
Nothing else. Yeah, sure.
No.
No, yeah, there are other.
I can see the slide.
Yeah, we can.
It's on the slide. Yeah.
For some reason, it's not getting erased. I'm sorry. Yeah. I'm getting more lines in there. Okay, bear with me on this. Bear with me on this. Right. So we are talking about tax benefits. So I talked about working on a convenient spending plan. Now, what's a convenient spending plan? Why do I say convenient? Because most often I find that people come in and listen to something on making budgets and managing your money and etc. And they go back with great, goals, saying, I'm going to go back, start writing. And then they start writing down their expenses, do it for 2 days, then they slow down, do it for a week, and then just give up on it. So I would say, make a budget. I've used the word, I don't want to use the word budget. I've used the word spending plan, but make it convenient. chew how much you can, take on how much you can chew. Don't take on more than you can chew. Okay, so just bite how much you can and keep it to that extent you want to. What about tax benefits on housing loan? Yes, there are benefits on housing loan, but just don't go around investing in the real estate just because you think there's going to be some kind of a tax benefit. The return on housing loan is not a great thing. So if you have one house or maybe two, and I would say just stick with that, because it's not necessarily the best thing as you're looking at your investment pie. You can again refer back to what Neha had to say last time. There are tax saving investments that you can make. Yes, public provident fund being one of the good ones that you can invest in. And all of these, again, coming back to new regime, old regime, I will touch on that. All of these give you tax benefits. Business expenses. Now, just in case you have your own business, there are certain expenses, just a little tip there. There are certain expenses that you can charge off to your business, like your mobile phones or your, maybe some kind of entertainment. So there are some things which kind of mix with your personal as well. You may be able to write them off as your business expense. So look at that as an option. Look at charity, also gives you tax benefit. In case I am big on charity, because I do believe for two reasons. Again, we are the privileged in the country, and if we don't give back to society, it's sad. So that's one reason. Second, I believe that when you give, the hold that this money has on us is broken. So it's a great way to kind of break the hold that money has on us, is to give. But again, it's got tax benefits. So when you're giving, look at benefits of ATG if you're able to get, and use that as well as a benefit. Write down your questions, please, whatever you have. So the third point is actively pursue investments. And again, all of these was already discussed last time. I just want to say one thing about the power of compounding. I know I've heard people say, I know this whole compounding business. I agree with the theory, but it just doesn't seem to be working. My money just seems to be the same. Believe me, if you've invested and looking for a compounding effect, wait, because you really see the growth after 15 years. So they say if you have a growth chart there, it's in the 15th year that you will see the big growth. Okay. So if you have a growth chart, so stay invested and you will see what you're going to find. Okay. So actively pursue investment. I'm not staying on that because you already heard of it. Run away from credit card debt. Can I quickly have on the chat, what do you think is the interest rate on credit card debt? Quickly, can I have some chats over there? I'm not sure if I can read it, but if I can't read it, maybe Rakesh, if you can help me. What am I hearing? What are people saying? What is the interest rate on credit card debt? And while you type in, I would say run away from them. Use credit, but don't use debt. Okay. For some reason, I cannot see the chat. If Rakesh, what are people saying?
Yeah, it's ranging from 24 to 36% per annum.
Okay, fantastic. So 24 to 30. You know what? The actual interest is about 45 to 47% a month. Okay. Now, let me give you what happened. Let me tell you a real story of what happened, because I realized that people are not aware of this factor. Okay. On this factor about the actual interest. Now, I had in the month of May, I had a credit card use of 55,000 rupees, 55,750 to be precise. Now, in the process, I never use credit card debt, but in the process of my husband and me working this out, we missed the 750 rupees. So we only paid 55,000 rupees. Now, in the month of June, we had a usage of 1.6 lakhs. And when the statement came, we had an interest of 7,000 rupees. And we were like, how could this be? And when we dug deeper, we found out that because we had missed paying up the 750, we were treated as being on debt, and every rupee that we spent after that, which included the 1,63,000, was being charged at 3.5% per month, which works out to 45% a year. Okay, so be careful, never be on credit card debt. And I would plead with you, in case there's anybody here in this group who's listening to me, sorry if you guys are working for credit card companies. If you are in a credit card debt, please, at the end of this session, please break your credit card, throw it away. Take another debt, find another solution, but please do not stay in credit card debt because the interest is exorbitant. And how is it that people get into credit card debt? It's because you don't keep money aside on the credit that you have taken, because this particular credit comes up for payment. Whatever you use your credit card for comes up for payment in the next month, and you are not able to use it. So I need to rush on this. So don't take loans only for your own investments. Look, where you get something in return, never for living expenses, never to travel to Singapore like Anu did, okay? Never to travel or living expenses. And once you are in a debt, be in a hurry to get out of it. If you need to take a loan, go ahead, but have a guaranteed mode of repayment. So having said all of this, spend less than you earn, manage money to meet your goals, actively pursue investment, run away from credit card debt, take loans only for investment, and all of this, and then you definitely remain smart. And now all of this is possible only if you would save. Save from whatever you earn. Now, what is the reason we do not save? The common excuse I hear is that I have no money left from all my expenses. But believe me, that's not true. The reason being, if you look at this chart, and the blue is income and the yellow is expenses, obviously the difference between income and expense is your saving. And as you save for 5 months, at the end of the 5 months, you have 50,000 rupees that you have saved, right? Now you say, no, I don't have enough because my yellow and my blue match up. And most of the time my yellow is higher than the blue. So I'm not able to save. But let's take a scenario where you've borrowed money at the beginning of the month. You have no choice but to reduce your expenses because you need to pay this borrowing every month. I hope you're getting what I'm saying, that it's a fallacy when we say that I am not able to save, because investment does not come till you've saved your money. So you need to save, and whatever you save, then you invest, right? So here, if you've borrowed, you are able to reduce your expenses. So you have this difference over here to be able to, save the money and repay your borrowings, right? But if you said, if only you had done it at the beginning, you would have enough savings and would not end up in borrowing money, right? So think about it. All of us have the capacity to be able to save, at least for expenses we know are going to come up in future, all right? So let me rush you through some tips. Here, keep separate bank accounts for each family member. Now, the reason is in India, we all file separate separate income tax returns. And this, do take this as a tip. It is the income tax filings or the return on your income or your investments are to be offered for tax on the basis of who spent the money. It's not like if I am the earner, if I am the one who's earned the income and I'm going to invest in the name of my spouse or my child or my minor child and think that it's going to go out of my tax net, it does not do that. It doesn't matter in whose name you've done it. The person who spent the money is the one who needs to pay tax on that particular return on whatever you've saved, it is fixed deposit, whatever it might be. Okay, so keep separate accounts for each family member. Keep separate accounts for business and personal. Now, what I find is when people get into businesses, especially if you're a sole proprietor, there's such a mix-up of business expenses and personal expenses. Now, I would say keep separate accounts and pay yourself a salary. Pay yourself a salary, fix that salary, pay yourself a salary, but do not mix your business and personal. Don't keep the business money and your personal money in your same pocket, and then you don't know what happened to your money. And people I've seen close down their sole proprietary businesses because of this. So those who are professionals, those of you, I'm sure, doing research and all of that, you're probably running businesses, watch out for this. Public Provident Fund, keep it for each member. You can invest for your children and your minor children. And the reason the income doesn't get clubbed is because the Public Provident Fund interests are not taxable. Okay. However, having said this, I would say, even though you have separate bank accounts for each family member, where the income of each family member keeps getting put into that bank account, make sure that your bank accounts are held in a joint account format, because even though you have nominees, we find that a joint account is much more easier, to close up and to handle once, should something happen to any of us. Okay. take a PAN number for sure and file your tax returns. I mean, nothing can be done today without filing your tax returns. Please go online. If you don't have complicated capital gains and stuff, you can file your income tax return online or use platforms like ClearTax or whatever. The income tax site itself is pretty good. There is something called the tax information system where you can actually see on the income tax portal where you can log in for yourself. You can see what are all the incomes that have been reported with regard to your PAN, and you can even use that to file your return. So try and do that yourself. So in case you haven't filed your return yet, please make sure you're filing your return. Taxes are on salary, house property, business or profession, capital gains, and other income. 5 heads of income. All your income that you receive would fall under any of these categories. Threshold limits under the old regime is 2.5 lakhs. Actually 5 lakhs. So 2.5 lakhs is the threshold, but up to 5 lakhs, you won't have to pay taxes as per annum. Under the new regime, up to 3 lakhs, you will not pay tax. Up to 7 lakhs, you will not pay tax, but the threshold is still 3 lakhs. That's because of a rebate that you would get. Now, do you need to be breaking your head about old regime, new regime? I would say no. Please do the working under both the regimes. Whichever works out better for you, choose it. But there is one big difference from this year onwards. The default is new regime, which means when you're going to file your returns, automatically it will presume that you're going into the new regime unless you opted for an old regime filing a particular form. Okay, so that's something to be kept in mind. Salaried persons, if you're going to the new regime, you lose a whole lot of allowances which you could otherwise have claimed. And in case you have loss from house property, so loss from house property, for example, can be set off under income from another head. You remember what do I mean by head? Salary, house property, those 5 heads we talked about could have been set off. But if you are in the new regime, you cannot set off. So these could be, so there's no standard formula I can give you, but try them out under both the regimes and see which one is more beneficial. Even for the year ended 31st March 23, the default is old regime, but you can opt for the new regime, see which works out better for you and follow that. Okay. I can take any questions on that if you need to, because we're running out of time. Make your financial positions known to your family, especially make sure your spouses know where your investments are. I would love to say have combined goals as husband and wife, if possible. If you're married, stay together, have your goals that are combined so that your financial, your financial investments are also done together. So make it known. When do you make a will? The minute you have any kind of an investment, and you have, let's say, property, make sure you've made a will. There is no age limit. The minute you have that kind of an investment, make that. And if you are in heavy debt already, work on paying your highest interest earning or interest charging loans first, and then keep rolling down to the next one and to the next one and to the next one. Be in a hurry, make it a point to get out of debt if possible. It has to be, you can make it work, especially if you're in that situation of scenario 3 where you're in a huge debt, in a mess. You should be able to get working, work with somebody who can counsel you if you need to, and get into a situation where you're able to get out of that debt. Choose the tracking desired. Now, what is that I mean? Because, even in this example that we saw, where we saw scenario 1, 2, 3, the only reason we were able to look at that overall picture was because there is some tracking done. But if you say, I don't know where my money went, you will not be able to, say where you stand. So I would say track it, but do something smart. Maybe you have auto payouts. Maybe you have, systematic investment plans where every month it goes off on the first itself. It keeps going out. Have separate bank accounts. Maybe for your living expenses, you move all your money into separate bank accounts. I'm just making it easier. Ideal if you have a budget and you're able to track it. If not, find a way of doing it, but at least track your credit. What do I mean by this? Just take a simple example here. Let's say you have these 3 bank accounts and cash on hand, 26,000 rupees. Don't always presume that you have 26,000 rupees available for you to use. Track it in such a way that how much ever is the credit card due, you are not touching that money. Only then will you not get into a credit card debt, right? So if you have annual expenses, maybe you have school fees that come up annually for your children, Keep that money aside on a monthly basis. Make sure you have emergency fund that you've kept aside. And then so in this case, you have 26,000 rupees, but you're spending only, available money to spend is only 5,300. Different ways of tracking. You might, have, you might keep Excel sheets, or you might use an app. There are several apps out there. Just for your information, this is what we use in our home. Interestingly, both my husband and me, we use one. My children also use the same app. I have nothing to do with this app. It's just something that we just found on the internet. It's free. Only thing, you can't share the same app, like I'd love to see it shared, but we're not able to share it. So I have to use it on my husband's phone. So it's Money Manager Expenses. I've seen it work very well. Now we have absolutely run out of time. It's 6:45. I've finished. I'm ending the presentation here, but I'm happy to take questions. Over to you, Maha.
Yeah. Yes, Manju. There is one question from Sharmila. She asked, can you suggest any investment plans other than FD? As a beginner, it's difficult to invest in mutual funds.
I know. So, I think investment was again something that was covered in the last session. Perhaps you want to look at the recording of that, which must be available with you. But apart from, like I said, public provident fund is an option that everyone must pursue, because it's a long-term one, of course. It's an investment that you make long-term. But there is something that we look at called morningstar.in, which kind of gives you a fair idea of, some mutual funds that you can invest in. So I'm afraid, apart from public provident fund and fixed deposits, recurring deposits, I think post office also, Neha did suggest, a couple of suggestions she had on that. Maybe you would want to look at that and see where to go by. I think once you've decided, just tell your mind that, yes, this is what I've done. Because most of the time when we just kind of invest and then we say, oh, did I make a mistake? Did I do it right? Or sometimes the value goes up or the value comes down, and then we worry about it. So just decide, invest, and leave it there is what I would say. Yes, Maha.
Yes, Manju. Another question from Alex K. This is can you throw some light on rates and how we can invest in rate funds if they are attractive?
I know. So this is all investment related questions. So I think I didn't want to get into the details of rate, and it's again real estate, but those are coming as mutual funds. So please, I would say read up or even listen. I think Neha also did address it last time on that. Are there any non-investment questions?
Thank you, Manju. I will ask the audience if they would like to ask question.
I think there's a question on credit card. Can I take that, Maha?
1 minute. Let me.
If we pay, it says if we pay, Veena has said, if we pay minimum amount prescribed to credit cards, still outstanding amount will be levied that much interest. Absolutely. That's the point. That's the point. The minimum amount due is a absolute lure. Okay. They're luring you into taking that debt. So go by the full amount that you have that you need to pay off. And if you are paying only minimum amount due, that means you are in credit card debt, and they're charging you for every 100 rupee you use your card for. Yes, Maha, sorry.
Yeah, no problem. One more question. I think this is revised PPF 7.1%, just fair above inflation. Is right investment. Again, investment question. But
yeah, but we can just say PPF. Yes, that's true. The big advantage is it's exempt all through. The interest is exempt. When you withdraw it, it's exempt. It's a long-term plan. It's government guaranteed, very little risk, etc.
Does anyone have any questions that you would like to ask Ms. Manju? Yes,
I think Veena had few questions, right?
Veena, can we have?
Yeah, throughout the sessions, I'd seen 2-3 questions from Veena. Veena, would you like to go ahead and ask your questions?
Okay, there is one from, okay, let me see.
Can I take that, Maha? Veena has asked, is the housing loan gain I don't know what it means. Really gains or gives us tax benefit, or is it also a myth? She says. No, it's true. There is on the housing loan, there is a tax benefit. So, and even if you've taken a loan, you are able to adjust it against rental income as well. Or if you sell it's self-occupied, where you're staying in your own house, you're able to adjust it. So you'll have a negative income, which is the housing loan, which can be adjusted against other income as well. But again, like I said, just because you have this benefit, don't go around investing in house property and then, saying, okay, I'll get a rental income, I'm going to set off for my loan, because you don't want to pay interest just for that purpose of the benefit. So if you really want to invest in a house property, go ahead and do it and make use of the tax benefit.
Yeah, one question from Sachin. This is it advisable to take credit card loan?
No, not at all. Not at all. Please do not take credit card loans. Learn to live within what you have. And if you really need to take a loan for a business, approach a bank, and process it through them. Is that Sachin? Okay. I hope I answer you.
Thank you. Yeah.
Okay.
Thank you. One more question. Shall we just take from Alex? His question is, I already have a house loan. Should I keep it for tax benefit or close it as soon as possible?
Okay. I am a believer in, close all your debt as soon as you can. Okay. So you've taken a loan, close all your debt as soon as you can is what I would say. But again, look at your interest, look at how much interest you're paying. If closing, you can look at it, but it's always nice to be debt-free. It's always nice to be debt-free is what I believe. So look at it from that point of view.
Thank you. There's a couple of questions from Aditya. I'll take the last one that says, should I take amount from PF account then loan for, say, buying a land?
Okay. Should I take an amount from a provident fund than buying a loan?
Yeah.
For buying a land, for say buying a land. See, again, all investments need to be viewed with reference to what's my return, right? So you have to assess your rate of interest on a loan versus what is the interest that I will get out of the investment that you're going to make. So if you think you've got this great deal of a land that's going where the prices are going to go up and you're going to get a great investment back, then perhaps you can take a loan from a provident fund. But remember, the provident fund is the basic investment that you have available with you, or that's a salary deduction that has gone. So if you use that up also, you have no saving. And again, remember, land is not liquid. Land is not liquid, but PF is liquid, because if you're comfortable with emergency funds, if you're comfortable and you've set aside money and you have like 6 months of your basic requirements in emergency funds and you have that money available with you, then I would say, because otherwise PF is something that you would have fallen back on, because the land is not something you can just suddenly sell and get some, get liquid funds should there be an emergency. So it will depend on your overall, money status.
Thank you. Do you have time? Do we have time for one more question? I'll just ask this one. This is what are the best money saving strategy or investments for child higher education?
There are some schemes with the post office for the girl child. However, I again say public provident fund is a good one to put it in the name of your child. You open it, you can invest up to 1.5 lakhs into that, and that will, that will grow by the time it's time for the child to develop. And so within, actually, there's a 15 years is a limit that is there on withdrawal, but you can also withdraw before that. So that's a good scheme that you can put into, or even mutual funds, because you can take risks. See, when you are assuming that your child is younger and you have a 5-year period, normally we say if you want the money back in after five years, then you can take a larger risk. You can put it into a equity linked mutual fund, right? So you can look at a mutual fund where you put you open a systematic investment plan where you invest a fixed amount of money every month, and that would you can take it out whenever you want, of course, but it would grow over that period. So PPF is already always there, but a mutual fund, which is equity linked, is something that will give you good return. And if you can afford to keep it for 5 years, definitely that's a good way to go.
Thank you.
I think, Veena, two other
Chinita.
questions, right? Maha, the last two questions about retirement planning, we could do that as well.
Okay. Okay. So this is from Veena. She was asking about comment. Can you please comment on NPS? Is it sufficient for our retirement?
So, see, so there's always this conflict between a national pension scheme and the public provident fund, actually. Now, in the national pension scheme, it is linked to equity. It is linked to the market, to the stock market, let me say. So because it's linked to the market, the returns are slightly higher than the public provident fund. However, and you can, so there are some things on withdrawal, but overall in the tax bracket, the 1.5 lakhs of tax benefit that you have, when I'm sure you all know about that ATC deduction, which you take when you file your income tax returns, all of this fall under the same 1.5 lakhs, whether it's tuition fees that you pay for your children, or whether it is the public provident fund, or whether it is LIC premium, or whether it is the NPS, all of them fall within the 1.5 lakhs. And now under the new regime, that 1.5 lakhs is also not available to you, right? So this is, yes, it is, whether it's PPF or NPS is something that you can choose, either of them, you can, but I think NPS, when you withdraw, there is a tax on certain amount of annuities that you would get back, which is not there in the case of public provident fund on withdrawal. So it hasn't, people would choose the PPF over the NPS is what, but definitely it's something that can be looked at. Maha.
Oh, thank you. So one more question related to the NPS. You just asked, is about 46 a right age to invest because of additional tax benefit in NPS?
That's the thing, it looks like there's additional tax benefit. It looks like you have an additional tax benefit, but overall benefit cannot cross the 1.5 lakhs. So there is really no additional tax benefit in that sense.
Okay, great. Thank you so much. I think we will
one last question.
One
last question I would ask. Manju, can you tell us, how as a family, if you want to do joint goals of a couple, how would they go about, saving? Or if we were to do a family budget planning, how would you go about it? If you could quickly give us an example, maybe you could give us a little clarity.
Right. So, whatever I said then, you would actually do it together with your spouse, right? You would set goals together, and you would, like I gave you an example of, I will buy a car when, I would buy a mobile phone. They're all things that are like very attractive. So we kind of spend on maybe eating out, especially for those, who are the younger ones, so if you could together decide and write them out as a couple, since you asked about being a couple, and be clear and transparent about your finances. I mean, each one, all the money is then put together into the same, I'm not saying everything into one bank, but then, everybody knows that we're looking at the combined income and not looking at individual income and individual goals, but we're considering what each one wants to do, but having a combined goal. Does that help, Kalita?
Yes. Because I think we have a range of participants here, and that's why I was wondering, how would it be? How would a family planning budget be different from an individual?
Right.
Is there any other question that anyone would like to ask before we would close the session? All right. I think we did see some feedback saying that, it was a very informative session and such talks are needed. I agree, because financial planning and money management is not something that we are taught at school or colleges, but it's such an important skill that is required for each of us, right? Especially in everyday life. So I want to thank Manju and Maha. And at this time, I hand it over to Maha as well.
Thank you, Kalita. We'd like to say a big thank you to our speaker, Ms. Manju George, for very engaging and an enlightening presentation. The tips that resonated with each and every one of us. And we really appreciate you taking the time to come and present and taking the time to answer the question. Thank you so much, ma'am. And special thanks to Kalita, our core member of Chennai Chapter, for organizing this and successfully, or supporting us in this. Thank you, Kalita. And we'd like to, on behalf of IITMAA, we'd like to thank the attendees for joining us in this event. Thank you so much.